Ooh, this stings for BYD as BYD shifts from a mostly domestic vehicle manufacturer towards exporting cars worldwide. Customers are seeing quality problems such as moldy cars. While mold can be a common occurrence in cars, especially when they are stored for a long duration in humid weather, the issue with BYD cars in Europe was that they didn't receive the proper treatment to have the mold removed. In Thailand, where Chinese EVs have taken the domestic automotive market by storm, BYD's quality issues seem to be mounting. Complaints of paint and plastic peeling have become public. Meanwhile, in Israel, BYD EVs are reported to have warped under the weight of roof racks. However, many of these seem to be logistics related issues, so I think BYD eventually will solve most of these. For example, some 10,000 BYD cars are estimated to be parked in European warehouses where they have been waiting to be sold since the end of last year. Okay, now this is a kind of recall that you certainly do not want to see in any Tesla. Porsche Taycan recall for battery fire risks expands. It is the second recall for the same problem. A short circuit in the battery increases the risk of a fire. Owners are advised to only charge their vehicles to a maximum of 80% battery capacity until the repair has been completed. Just to be safe, I would say charge only to 70%. Or ideally, get yourself a Tesla and don't worry. You have to see this. I have a few rideshare rides on FSD beta 12.3.1 again tonight. Not only could it do the entire drives on its own, it can already do it more smoothly and comfortably than I can. That's a big statement. It's already a more comfortable experience for the passenger. And this is the poopy, stinky version, with basic things like flashing red lights still not handled. Imagine when this architecture actually becomes mature. Buckle up, this year is going to be fun, warns Omar. Xiaomi is a big smartphone manufacturer in China, and now they want to make EVs. They are going to release this one under $30,000 with 434 miles. Keep in mind, this is not EPA. And from everything I've seen about it, they will be not making any profits. They will be losing quite a bit of money with this. For battery comparison, the Model 3 long range has almost 80 kilowatt hours in the battery, and the trim with supposedly 434 miles has a smaller battery than the long range Model 3. So James asked, what is it with these random Chinese companies that don't even sell cars historically, just tripping over themselves to sell EVs at a loss in this ridiculously competitive market? This is so dumb. Here's something to watch. Microsoft and OpenAI plot to build a $100 billion supercomputer, basically. It would also, of course, include a data center, but this is big. I think Ray pointed out something obvious, but when you hear it, it actually hits you in a different way, I think. We have seen celebrities show off their Cybertrucks, but we also cannot wait to see celebrities show off their Rivian R1Ts and F-150 Lightnings. For sure, it is going to happen, right? Colin Rush was just on TV, and he is the highest ranking Wall Street analyst that also analyzes Tesla. Let's see what he had to say.
Just your reaction to obviously this downward move that we've seen in Tesla. Not exactly a massive surprise given the trends that we had seen over the last several weeks. But how is Tesla set up now, not only in the current quarter, but looking ahead to the remainder of the year?
Yeah, so this first quarter is setting up to be pretty messy. I think everyone understands that there's seasonal weakness here in the first quarter. They've had some supply chain disruptions, in the European supply chain with the Red Sea. They also had this fire in Germany, that shut down the factory for a little bit, and the announcement that they're kind of trimming some of the production in China. And so I don't think anyone has any big expectations for production here. But what is at stake, I think, is where the margins shake out for the quarter and how that sets up for the balance of the year. And so as we're looking at this, we just trimmed numbers on the first quarter, just out of a bit of caution. But we're also seeing them recognize a certain amount of deferred revenue with the release of the version 12.3 on the FSD. We think they're going to recognize a reasonable amount of revenue there to support the margins. And so, net where we're at is we think there's a bit of a better than feared trade setting up here on the quarter, provided that the margins hold up as we get into the balance of the year. I mean, the bigger question really is, where are the normalized margins going forward?
Right. And so with that in mind, it all comes back to some of these pricing dynamics and how that correlates within the mechanisms that Tesla is actually able to demand or generate demand here at this point too. As you think about some of the other adjustments that they're going to need to make, are they going to need to make other production adjustments given the demand environment here too?
I mean, one of the things that this company has been really great at is making ongoing, cost optimization choices, and so they've continued to drive cost out of the vehicles on an ongoing basis over a number of years, and so we think they continue to do that. They've got some benefits from materials on the lithium side that are still yet to fully roll through. We think they're continuing to beat up their suppliers on components, and then they continue to be in the Western world still the largest the EV OEM. The question for me right now around where they're selling is how much they're going to sell into the Chinese market, where there is this very aggressive price war, and how much are they going to start shipping a number of those vehicles into other countries in Asia and a number of the underserved countries that they really have not been selling into, but do have a sales footprint.
So nothing really bad. Clearly, he expects Tesla to not have good delivery numbers this quarter, but he also reiterated that Tesla is very good at cutting costs in the long term, which should help it win the price war in China eventually.
What's going to be the catalyst, though? Because it doesn't feel like the price cuts, the pressure there is easing at any time. At the same time, when we talk about this next wave of EV adoption, it is about more affordable vehicles, which Tesla doesn't necessarily have.
Yeah, it's a Game of Thrones price war right now in China. And I look, as that plays out, Street understands that, but they have not communicated that well. So in other words, where's the line in the sand in terms of margins? Walk through how they're going to reverse the strategy in China, because the opportunity is still there. In other words, we're still in the early innings of where this is all playing out, full self-driving, AI. But no doubt, I mean, these are some dark days ahead that Musk needs to navigate. And I think it's a defining chapter in the Tesla story. And that's why investors, patience is wearing thin. And this is just one where it's going to be a very, very difficult quarter.
So let me ask you, all right, I could put you in front of Elon Musk right now. What would you tell Musk? What would be the Dan Ives game plan to turn this around?
Have an adult in the room on the conference call, give a communication strategy around guidance, margins, hold an AI day, give some strategic targets. And also a lot of the noise with Musk leaving is, his AI initiatives.
Basically saying, listen, I could take my AI and my robotics plays, I could take them elsewhere.
That's 70% of the value of Tesla is Musk. Okay, so Musk is Tesla, Tesla is Musk. Investors have a lot of patience, and we've been here before, 2018, 2019. This is nowhere near those, but this is a white knuckle period that they need to navigate. You compare that to what Cook will do on calls, Nadella, some of the other Hall of Famers. I'm not saying Musk is going to do that, but this is a quarter that's really going to shake some confidence. And I think that's the thing. We see it on the other side in terms of being bullish, but no doubt that's why we had to lower the price target.
Dan Ives' latest Tesla stock target is at $300. So he thinks that without Elon Musk, Tesla stock is worth $90 per share. I think Elon Musk is really important to Tesla, but I don't think that Tesla stock would drop by 70% if Elon Musk left. I think it would drop, and it would be significant, but I don't think it would be 70%. Like and subscribe if you haven't yet, and watch this video if you are interested in Andrew Tate from Wednesday. I have it on this channel. I have also been using Ground News. Check it out in the description. You might like it. I find it a bit easier to go through the latest news with that app.